You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, that music means it is time once again for TWIFO, This Week in Futures Options program. Listeners, the program where the name pretty much says it all. We break down the week that was and indeed still is over there on the futures options side of the fence. Remember, if you want to play along with the show, play the home game version of the show. The best place to do it is head on over to cmegroup.com, then click on TWIFO, TWIFO, or TWIO, This Week in Options. Both of those should get you to our TWIFO reports. And from there, you could follow along, generate your own reports, have all sorts of fun. If I do sound a little bit different, listeners, it's because I am hanging out in the Southern studio this week. So we're going to do more of a Just the Facts, Ma'am edition of the show, where we kick it off, as we like to do, with a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up out there in CME Group for this week, to the light side and to the dark side. If you follow us on Twitter, we do tweet this report out before showtime, so you can see how things are hanging right now. And if you did check out that chart, you would see we are mostly biased towards the green. I would say it's about 60-40 green over red. That said, our largest percentage movers are definitely to the dark side this week. So there's action in both directions. Let's see. Let's kick it off. Let's go dark side. Why not, listeners? I'm running the show. I get to choose. We go dark side when I'm running the show. Number 5, to the land of the beans. Man, we did a deep dive into all things beans last week. So if you're one of our ag heads and you've been waiting for a while for a deep dive into soybeans, I'm talking soybeans, the meal, and the oil, the trifecta of the beans, listeners, then go back and check out TWIFO from last week if you missed it. It was the most beans we've ever talked. But it was fun to talk the flow, the vol, and just a little bit different. The ags, very different rules of engagement, very different vol, very different skew and term structures. Fascinating to break down. I say all that because number 5 to the dark side this week is our old pal soybean oil, off 3.62%. It was number 5 in the other direction last week, up 3.37%. So soybeans giveth and soybeans taketh away this week there. Taken away. Number 5, to the oil we go. A lot of ags and, let's say, ags adjacent products in our dark side this week, listeners. Spoilers. Number 4, we're going out to wheat, the hard red winter wheat, listeners. off 3.87% this week and taking the number 4 spot. Number 3, back to the beans we go. This time, soybean meal off 4.21%. It was number 2 in the other direction last week, up 4.93%. So again, soybean meal giveth and taketh away. So beans have been on an interesting run this year and giving some of that back right now. Number 2, keeping it in the ags complex, it's oats off 7.35%. And the big dog to the dark side, I've said it before. I think I said it on the show last week, maybe on the futures rundown this week, that this product is the overlooked product. We have to overlook it on this show because it does literally no options paper. Same thing with number 2, oats, but they do clearly move. They are clearly volatile assets. What am I talking about? It's lumber. In fact, oats and lumber are the 2 examples I hold up of very volatile assets that, for whatever reason, do not do commensurate options paper. Lumber off 9% exactly this week. So a dark week for dead trees out there, listeners. Again, I said it on the futures rundown this week. If you want to go see some volatility, go check out lumber during the height of the pandemic, listeners. Lumber was running wild. Remember our TWIFO show, our buddy Sean, my co-host there, he had his fence watch. He had to keep an eye on lumber prices, so he wanted to build a fence, and it was astronomically expensive at the time, and it fluctuated wildly week after week. So everyone talks meme stocks and crypto and everything else that was going wild in the pandemic. No one really talks lumber, and I think it very well might have been the most volatile asset on the planet back at that time. It was absolutely wild times for dead trees. All right, I digress. To the light side we go, listeners. We got some metals kicking it off. We're going to kill some werewolves. It's number 5. It's silver, up 3.18%. Number 4, from the silver, we go to the S&P, to the energy sector of the S&P, up 3.6%. So a good little run here for the energy sector. Number 3, to small caps, Russell 2000 stealing a march back this week, up 4 1/3%. If you've been listening to our hot options report last week, IWM was lighting it up. Kind of quieter now, but getting a nice little move this week. So maybe they'll break back in on the hot options report. Stay tuned after the bell for all of that fun out there, listeners. Number 2, back to the ags, or I should say ags adjacent, because it's the livestock, in particular lean hogs, up nearly 5% this week, 4.95%. It was number 1 in the other direction last week. The hogs were getting slaughtered, off nearly 18%. So slowly clawing their way back from that. If you want to hear some talk about livestock, in particular feeder cattle, and how important they've been to the market of late, and indeed their impact on soybeans, check out TWIFO from last week with Kevin, and the futures rundown last week with Carly Garner, where we got into all the madness of feeder cattle and its impact on other complexes like Indeed and other products like Indeed soybeans. So wild stuff out there. Everything is interrelated in the futures market at the end of the day. And then the big dog this week to the light side, up 5.52%. It's our old pal, the Widowmaker, nat gas, clawing its way back from the darkness. Nat gas has been taking a beating so far this year. I think it was off about 20% on the futures rundown on Wednesday year to date. So clawing some of that back. I mean, it is the dog days of summer out there, listeners. But we are starting to head into maybe the fall season, different blends coming in. Things get a little cooler, and maybe nat gas taking a bit of a turn to the light side. Speaking of turning to the light side, let's turn to the vol right now, listeners. You can run this report for yourselves as well. Just type CME and CVOL into whatever browser you're rocking out there, listeners. And then if you want to line up with the show, set the high-low range to 1 week, and then go to the aggregates tab. And then you too can play the CVOL home game. Let's start in the treasuries, listeners. 98.58 today, up about 2.25 points. Just today, that is the high for the week. By the way, we have another mostly biased to the upside week with 2 stark exceptions. You'll see when we get there in a second. But to the upside, we kick things off with the treasury yield volatility, 98.58. That is the high for the week. The low, 88, pretty much exactly. So over a 10, about a 10.5 point range on Treasury yield vol this week. So wild stuff. Let's go out now. That's, of course, going back 1 week. So that takes into account all the madness of Jackson Hole on Friday and the resultant action we've seen out there in the treasuries. So it's been a wild week, listeners. Right below it, we have the metals. Not quite pinning the needle to the upside, but pretty darn close. 15.95, up about a third of a point today. Today being the only day of the week when the metals actually gained vol. They lost vol the rest of the week. That probably explains this range. The low was 15.60. The high 16.29, so obviously close to the upper portion of that range, but not quite kissing it today. For the aggregate metals CVOL, below it we go to FX 7.74, up a quarter of a point, actually 0.28 today. That's a huge move for FX volume. You're starting at a baseline of around 7.5. The range for this week 7.43 to the downside, 7.78. So pretty much pinning the needle to the upside today, 0.04 away from the high right now. So interesting. FX getting a bit of a lift. Of course, we've seen some more drama on the international trade war front, back and forth with China, back and forth with Canada, and indeed big tariffs on India. So seeing some commensurate vol action in FX as a result. Interesting stuff. FX tends to be a sleepy complex from a vol perspective until something happens, and then it tends to over deliver. So we'll keep an eye on FX right now as we keep on rolling out to the ags. 19.1 for the ag product CVOL, up about a quarter of a point today. This is another one. And if you look at the CVOL report, listeners, you can see this. It shows you the trend. And the entire week vol was crashing until today. Today's the only up day we had, which is why we're hanging out closer to the middle of the range here in the ag products. 18.87 was the low, 19.33 was the high. Obviously, we're about 0.23 away from that right now at 19.10 in the ag product CVOL. Below it, we have the Treasury price vol getting a lift this week, 5.32, up 0.12 today. That is the high for the week, the low 4.74. So we have Treasury yield vol, we have FX, and we have Treasury price vol, all pinning the needle firmly to the upside. Ags and the metals close to it, if not the upper middle portion of their weekly vol range. And now we get to the dark side, listeners. Where are they crushing vol? It's the aggregate commodities CVOL. 32.60, off 2/3 of a point just today. That is the low level for the week. The high 33.63. And then below it, we have the aggregate energy CVOL, 48.87, off almost 1 3/4 points just today. So they're coming for energy vol today. It's like they came for it for most of the week as well. 2 days where it trended up, but 3 days trending down. 48.87 is your low level for the week. The high 51.31. So they are crushing commodities and energy vol out there this week. I know I said just the facts, ma'am, listeners, but you know what, listeners? Let's do one quick complex here for the week to give us all a taste. We got a lot of choices here. We got nat gas, we got silver, we got a lot of beans and ags. We did a lot of ags last week. Tell you what, it's weird to say, but we haven't really delved into our old pal nat gas in a while. So I think to the world of energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let's talk some nat gas. Go into that drop down, listeners. And then you're going to go from the top. It's an alpha order list. You're going to go down from ags to crypto and then to energy. And then in product family, 3 more to nat gas. And that's where you find the Widowmaker for this week. Is it a banger week in the Widowmaker? The answer is it's pretty active. 830,000 contracts. Again, interesting stuff out here. Nat gas puts the lie to the notion that you need an underlying to be north of $5 or $10 to really do a lot of options flow. Nat gas hanging out 297 in that front future that's going away in a few hours or a few minutes actually, and doing nearly 1 million contracts already. So nat gas is the exception that proves the rule. Looks like almost 51% of the flow out there this week going up in the October contract that has 28 days to go. we're going to hang out there. What is the volume, might be asking, in October? Nat gas 54.70, off about 3.25 points. So they're coming for the vol out there a little bit this week. That also backs up what we were just talking about on the CVOL report, where they are coming for the aggregate energy CVOL as well. Obviously, nat gas, a big player in the energy complex, so no surprise it's maybe dragging down that number a little bit. Skew-wise, it does seem like we're getting a little bit more action with the puts. They were 3.4% bid last week, ticking up to 4.6% bid now. And the calls 1.2% cheap last week, 3% cheap right now. So definitely looks like a modest equity skew is starting to price in here, where folks are maybe leaning a little bit towards the downside here. Could be some of folks are just, we're settling right around that very psychologically important level of $3. 297 is just a few cents away from it. So folks could be locking in some hedges here and maybe selling a little bit of upside. Either way, a modest, nothing crazy, but a modest equity skew. Now, if we go out a little bit, listeners, to the beginning of next year, to the winter time, the hot time for nat gas action, we see obviously a bit of a flipping of the script. First off, the futures out there are almost $1 higher. In December, they're 383. They're over $1 higher in January. The future out there is 416. And the calls are bid to high heaven, 10% bid. The puts 6% discounted. So folks are pricing in a nice hefty jump in the wintertime in nat gas, but right now they are leaning, looks like, towards the dark side. We're going to hang out in October because that's where 50% of the action is going up this week. And what was the big dog out here in the big boy, which is the Widowmaker this week? Looks like the hot option in nat gas this week was not the 3 puts, which you might be forgiven for expecting since we're hanging out pretty much right at that range. And it wasn't even the 2 3/4 puts. It was all the way out at the 2.5 puts. That's an interesting level. Again, we have about 28 days to go, so nearly a full month. 2.5 strike by the end of this month. Would you be buying those? Listen, I'll see if I can find some prices for you in a little bit. But they went up nearly 70,000 times this week. That's a heck of a lot of paper. That's probably, I haven't pulled it up yet. That's probably more than silver. It's probably 2x what silver has done. And it's probably more than a lot of the secondary FX names have done if you add them all together. So that's a decent amount of paper just in the 2.5 puts in nat gas out here, which is kind of interesting. The hot day was today, nearly 30,000, so almost half of that going up today, 15,000 yesterday, 12,000 on Tuesday, and about 12,000 again on Monday. By the way, the OI right now, 85,000. That's a ton. Let's look really quickly because I am intrigued by this. And I have a feeling 2.5 puts, 28 days to go. They can't be trading for that much. Yeah, almost 4 cents. So does that float your boat out there? Listen, a 2.5. It's a big move. I get it. It's cheap. So I suppose if you want to buy them as a flyer, I sure as hell wouldn't sell them for 3 to 4 cents unless you really are excited about getting long nat gas at 2.5. I could see an argument for that level, not for the options price, obviously, but 2.5 puts. Let's just look really quickly to see if we can find it. It doesn't look like there's really any vertical action going up here. 35,000 of the 2/4 puts traded this week, and about 35,000 of the 2 3/4 puts traded this week, versus almost 70,000 of the 2.5. So is it possible that it was a fly? 275, or 2 3/4, 2.5, 2.25 put fly in nat gas, probably buying the 2 3/4 puts, selling the 2.5 puts, and then it looks like it could have gone up close to that ratio today. Let's look. I didn't see it trading as it looks like the 2.5 puts were just trading straight up, and they were. Yeah, 15,000 of them going up for about 3 to 4 cents. I don't see, I'm looking here for any signs of vertical action here, listeners. And I'm not seeing it, listeners. Yeah, it looks like it was pretty much what you expect it to be, just a lot of interest in those 2.5 puts. Opening paper for size. Interesting stuff out here. I mean, I guess if they could be bailing on them today, there are 80,000 open on the strike, but at that point, they're worth 3 to 4 cents. You might as well just keep the lottery ticket and see what happens out there. Listen, either way, 2.5 puts, Would you be down for those at 3 to 4 cents? I guess not a bad lottery ticket. What would it take to really crush nat gas down to $2.50 over? I mean, summer is kind of coming to an end. Obviously, you're looking at a little bit of a forward-looking product here, and yeah, interesting flow. That's why we crunch the numbers out here, listeners. Worth noting, it's not all downside. If we go out to November, it's the 3.5 calls going up about 20,000 times. Again, the big day was today, 13,000. Today, a hot day, pun intended, out there in NASDAQ. Let me go look one more time to see if I could find prices for us listeners on the 3.5s. Maybe you're a little bit more down with these. About almost 18 cents. So again, we're hanging out right about exactly $3. So the 2.5 puts and the 3.5 calls are pretty much equidistant in terms of strike out there. Which of those would you rather have, listeners? 3.5 calls, again, different durations we're talking here. We've got October and November, so hence the little bit more juice going up on the 3.5 calls because you're getting more duration, but still both sides of the coin lighting it up out there. Interesting stuff out there, listeners, in that gas. Speaking of interesting stuff, let's get out of here with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right. I know I said just the facts, man, but I lied, listeners. Let's get a little bit of your feedback in here. In particular, this is the question of the week that we've been talking about because it's very relevant to this show as well, because the genesis, looking at some of the listed products here on CME in the crypto side, it does seem like everything we've seen going forward and all the new products that they've announced have all been cash settled, which raises the question, is physical settlement, is it dead in the crypto space in particular? I know in general, CME seems to be moving towards a lot of cash settlement. It makes it more palatable for retail. We joke on our futures options show, you don't want the proverbial truckload of soybeans dumped on your lawn at 2 a.m. There still is that lingering fear if you do the physical settlement, no matter how low the probability of that actually coming to pass is. That's still there. There's a lot of logistical hurdles that go along with the physical settlement as well. So people just don't want to deal with that quite often. So there is an argument for the simplicity of cash settlement. But of course, crypto posed an intriguing use case, being able to generate yield around your underlying that you already had on the crypto side. So you could sell covered calls against it. It was a nice way to maybe have some of your crypto called away. If you were into such things, generate some yield on it, and then also potentially get long. People want to get the underlying put to them. They want to get long by selling put. So there were use cases that the early crypto derivatives exchange sprung up around. The Ledger X, that was their entire MO. The same thing with Backed. It does seem like that has pretty much gone the way of the dodo, which is why our question of the week right now is quite simply, are physically settled crypto derivatives dead? Do you see a need for them, or do you only want cash settled contracts going forward? Again, we had a question here from Forrest Gumpit. He said it would be useful to explain where each type has an advantage for trading. As I said earlier, the cash settled, really the advantage is just in the simplicity. Anyone can trade a cash settled contract. Your proverbial grandmother from Iowa can trade a cash settled contract. Doesn't have to worry about taking delivery on crude oil or anything else like that. It's a very simple thing. You're just debited or credited at the end of the trade. No underlying changes hands. There's no other capital that needs to be allocated for that or anything along those lines. So that makes it refreshing from that perspective. Physically settled, like I said, the primary use case for that is in conjunction with the underlying. You want to either have your underlying called away or you want to get some put to you. And that's pretty much the main use case for physical settlement. So there's no real pro or con. It's really just more along the lines of what you prefer. If you like the ease of use and simplicity, then cash settled is key. And that seems to be the key for our audience right now. 75% of you exactly say you're only interested in cash settled contracts. 25% say I'll go the physically delivered side, which is probably why we saw the physically settled stuff from Bakkt and LedgerX kind of go the way of the dodo. We'll see. Maybe we'll have another wave, but right now it does seem like the wave of the future is cash settlement. And that's going to do it for us on this extended Just the Facts, Ma'am episode of TWIFO. Hope you're having a good trading week. I'll be back a little bit later today to wrap up your day with the hot options report. And for some of you hanging out there in the pro, maybe come back with the hot options report. Maybe we'll have a little bit of fun after that for all you pro folks as well. Should be fun. Then back again tomorrow, talking some vol with Dr. Vix and other special guests who will join us. Well, you got to tune in to find out. And then we're off, of course, for Monday. Everyone have a good long weekend until we're back again next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.